Good morning, good afternoon, good evening, and welcome to the Thursday, the 3rd of March 2022 Bull versus Bear webinar for TradeDay.com with Steve Miley here on the call. So welcome everyone, welcome. We're going to go through our usual regular run through in here today. Calendar, what we've had, what we've got coming up. We'll take a look at articles from the major news wires, what's impacting markets significantly right now. Clearly, geopolitics, Russia, Ukraine is high on that agenda. And we will take a look at some charts and see what's impacting markets on the charts and where maybe some of the opportunities might lie. We'll kick off with a calendar, just winding back to yesterday, first of all. And I'm hoping that I can find, I've got a lot of tabs open in here today, a lot of stuff to run through and show you, but so not here. I wanted to look at Powell. Oh, here we go, Powell. So Powell yesterday, we had Powell testifying. Powell testifies again today to Congress. So watching for the Q&A there. But basically the tone from Powell was still relatively hawkish. So, saying, basically flagging almost certainly a quarter point rate hike coming later this month. And then also flagging potential for even more aggressive moves going forward. So swaps prices at the moment pricing in 4 more Fed rate hikes this year. So the dollar strengthening on the back of that broadly. And so markets, but we did see yields fell across the curve in Asia on Thursday night after that. So markets in here generally pricing in more rate hikes, are still very hawkish tone. Although we are now, going back to our CME tool in here. If you look at what we're actually pricing in for March now, remember this had, a risk of a half point increase for March now, pretty much 100% now saying a 25.25% 25 basis point increase now at the March meeting. So the markets have shifted to less hawkish, but certainly Powell in here is certainly keeping the door open to, or certainly looking for a March hike and potentially more aggressive tone. He certainly indicate if required, even though he did give a nod to obviously problems that we are having with regard to the problems for global. But look, Ukraine war won't deter Fed and Co from March rate hikes. So that's certainly what came through. And we had the Bank of Canada hike rates in here. Markets pretty much priced in, but markets also reacting to that in here. Federal Reserve certainly looking for those to continue but expectations for bigger rate hikes falling away. Okay, but nevertheless, the Fed have kind of indicated that they're still very much on track in here. What have we had in here then this morning? Well, in here it's PMI day. So we had the manufacturing PMI back on Tuesday. We get we've had service sector PMI and the composite PMI. And you can see most of this in here through from Europe this morning, France, Germany, the Eurozone as a whole. And for the UK, missing expectations. So negatives there, not massive misses, but in places, French was a significant miss in here. So missing the expectations in here. So a little disappointing in here. Potentially some of the impact from the build-up of the Ukraine forces filtering into that already. So remember, this is very much a lead indicator. Looking through into this afternoon, so at 9:45 Eastern time, 8:45 Central, we get the market composite and services PMI data. But remember, for the US, the market is much more focused on the ISM data, which we get 15 minutes later. That's at 10 a.m. Eastern and 9 o'clock Central time. So the ISM non-manufacturing, so effectively the service sector PMI data, 10 o'clock Eastern time today. And that's when Powell testifies again, watching for the Q&A in there to see if we get anything different from the Q&A. So just stepping back into yesterday in here, we did get in here the Bank of Canada hiking by a quarter point in here, as expected, up to 0.5% rates in here. So yeah, so that's what we've had and what we've got coming up. Powell and that ISM data in focus at 10 a.m. Eastern. So that's going to be what we're watching for. Let's take a look at some of the other stuff from the major news wires. So in here this morning, we've got a slight dip on European equities, mostly driven here by the surge in oil. So in here, where are we? I've got lots of articles on all this, but oil surging higher again, both WTI crude oil and also Brent crude oil surging higher. Those inflationary pressures from energy, other commodities also pushing higher in here, and that has put a little bit of a dampener on the equity markets this morning, but not particularly negative in here. You can see most markets, the DAX is down 0.7%, but CAC is actually flat for the day. The French index in here, FTSE's down about 0.7 as well. So markets dipping slightly lower in here overnight in Europe. And if we go and take a look at the US indices in here, obviously we finished up, it was a strong day in the end yesterday. The Dow was up 1.8 and S&P about the same yesterday. NASDAQ up also significantly higher. But we're dipping lower on the, but only modestly lower in here, pretty much unchanged as we go in to today in here. So you can see the Dow, hardly lower at all. A tenth lower on the S&P and about 0.2 lower on the NASDAQ. They were lower than that earlier on today. We've had decent intraday rebounds. So we have had US equity markets dip lower and, or the futures market, dip lower and rebound, but pretty much holding on to the gains that were posted yesterday. So certainly still a positive outlook in here running into the day, and we'll come to take a look at the charts on all of this shortly. So saying stocks declining here as commodities surge, we've already spoken about that. There's been no significantly strong developments. There are been in Kyiv, we are seeing in Ukraine explosions, large explosions, but and one of the cities has fallen. So Russia's taken one of the first cities. I can't remember the name of that city, but so we've certainly seen some developments there, but only very minor developments. And one thing just to talk about in here is Forex Live coming in. Next round of Russia-Ukraine talks may start at 12 o'clock GMT. Well, that's right now. That was 30 minutes ago. Not sure if they've started yet, but that's when they were due to start. We're not particularly expecting anything from that. Don't think either side are looking to concede anything at the moment. But nevertheless, they are still talking, so you could view that as a positive. So we've got that today. And if we look in here, what we're seeing so far today, well, a mixed tone so far in European morning trading. So as I say, European stocks have dipped slightly back lower. US stocks are pretty much futures are marking time. Oil surging higher in here. Brent, and it has tracked back, but Brent is still up 2%, but back from its highs. So 119.84 Brent hit this morning. So markets still in here, very much concerned about inflationary pressures, but nevertheless European equity indices only dipping slightly lower, and US futures not much moved in it. And the US dollar in here mixed in here. So gained yesterday, significant gains versus the euro yesterday. Euro dollar down 0.3%, and continues to pressure one, but stayed below 111, and dollar yen is up 0.2% near its more recent high. So mixed tone in here for the dollar on the FX side. Let's dip into the 5 things you need to start your day. Nothing we're really not covered in here. Commodities, so in here you can see the Bloomberg, it's a commodity index in here. Raw materials, highest level, best week since 1974, massive move higher in raw materials in here. So obviously inflationary pressures potentially coming through from there. So talks due to start today again. They're covering that. What else we're seeing? Commodity prices surging in here. WTI crude in here, highest level since 2008. Brent crude has traded up. We've already seen that, and that was on the back of actually. OPEC Plus in here not hiking their scheduled quota yesterday. So that has sent crude oil, something that you need to cover from yesterday. We had the OPEC Plus meeting outcome and not hiking the scheduled quota. They are hiking, but not increasing the schedule of increases. So they did have a scheduled increase that is in place, but not hiking that at the moment. Okay, and then we look. So in here, look as well. They're looking at aluminium, nickel, zinc, wheat, all continue to rise. And then, look, so Bloomberg Commodity Spot Index, and of course, for its biggest weekly gain since 1960. Wow, didn't see that one before. Missed that. So, commodities up for biggest weekly gain since 1960. That's a big headline, right? A huge move up in commodity prices, not just energy. The Bank of Canada, we mentioned that, raised interest rates as expected, First Central Bank, and Jerome Powell indicating quarter point rate hike during his testimony in here. European Central Bank Chief Economist Philip Lane said the bank will take into account the economic consequences. Certainly fading. You can see by the weakness in the euro. You can see by the surge. We looked at more recently the surge in the Bund market, the Bund future. German government bonds, remember, moving back to negative territory on yield. 10-year German government bonds having been throughout February, they've been in negative territories through the pandemic. We did move into positive yields for German 10-year bonds, which are bunds, called bunds. German 10-year government bonds, bunds, moved out of negative territory right at the beginning of February, when we had that ECB meeting where they kind of seemed to pivot to more of a hawkish tone. Well, that seems to be being abandoned by the ECB now, and we've seen German government bonds surging into higher prices, to plunging to lower yields, and back below, and the 10-year German government bonds back below zero to negative yield territory. Okay, what else do we have in here? Markets lower in here. We've already spoken about that. ECB minutes are due at 7:30 US time, so we do have that today as well. So let me just go back to the to the calendar. I don't think that's out yet. Let me just double check in here. Oh no, I've got the calendar. So that is out. I think it's just come out actually since we've been on. So we've that's been out since when we just first started the webinar. So it'd be interesting to take a look at those. Not going to get a chance to go and look at those right now. Maybe Forex Live have picked that up. If I go to Forex Live, if they've got anything on that, see if we've got any kind of live stream on Forex Live. Just give me a second. See if there's anything on that. No, nothing on that. So nothing breaking there. So probably nothing of real significance coming through from those minutes. We're covered off in here. So stop declining. We've spoken about that. 5 things to start your day in here. We've already looked at that. Just looked at that one. So business growth in here accelerating in February, but we've also seen those PMI data has actually missed expectations in here. And the renewed oil surge, we've already kind of covered that in here. And this is the morning bid, so this is kind of their version, the Reuters version of 5 things to start your day. Nothing really more in here. Talking about Brent crude, ECB rate hikes probably not, less likely in here now. I'm talking about that, looking at the negative yields in here for German government bonds in here. So kind of stuff we've already spoken about. I thought this was interesting. A Russian ETF in here, exchange traded fund, for Russia, is up 100%, double in price. Obviously, having massively sold off, but maybe value buyers coming in, bargain hunters coming in, buying the ETF in here. So this is it's an iShares, MSCI Russia. Russian companies in here up is doubled, but it's down. It's still down by more than 80% this year. Okay, so it's down by more than 80% here, but it's rebounded, doubled back in price, up 100% in here just this morning. Some value buyers coming back into Russia. We already looked at this in here, and let's go take a look at some of the charts. So one of the key drivers in here, we had this big gap up on oil, and oil pushing higher again this morning. So Brent crude significantly higher. Opportunity there. Well, it's rallied. It's already rallied. We've already had the setback. Maybe that's a buy opportunity on this setback. Let's step in. Let me go back to that. So we've already had the setback. That's the daily chart. Let's go take a look at the 15-minute. So there's that gap higher in the market, then higher and higher and higher, setting back. Look, and already rolling back higher. In here. So we're kind of an exponential rise in here. So the actual trend lines in here probably not too useful for us in here. Let me just step out slightly in here. I'll come back in a second. But if we look at oil in here now, This is now on the 1 hour chart. I'm going to just get rid of some of these old trend lines in here. But, you know, really these trend lines are not too much use to us. These trend lines we've got coming up, even if I just step out a little bit more now to actually let's just leave it at the 1 hour chart at the moment. You know, these trend lines here are obviously far shallower because we've had this kind of exponential move. Trend lines, you know, kind of tend to start to lose their impact. You can see that here we're that's a 13 period EMA. You see a 13 period EMA. Now I find this really works well, hugging trends, you know, and you can see in here, look, it's worked really well on the daily chart, hugging. And look, the market's not actually closed below that 13-day EMA since all the way back here, since the end of last year around Christmas, 20th of December, 21st of December. The market's been above that 13-day EMA. It's come and just touched it. So this is on the daily chart. So it works really well, you know, and then obviously it moves far faster. You know, you had a trend line through here, and now it's kind of moving exponentially up as the price has surged higher more recently. And if we go and take a look at it on the 1 hour chart, it's kind of working okay in here. I mean, it doesn't work particularly well here, but when the market's been more sideways. But you know, now we've gone into trend, and you can see the market's dipped to that 13 period exponential moving average. It's on a 1 hour chart, and it's trying to hold that. You know, so I think, you know, this is the buy opportunity for oil, you know, for today. You know, there's no reason it can't go back to the highs. And if we look at the 15-minute chart, you can see the market's dipped lower. If you think of higher highs and higher lows, Dow theory, the last significant low is here. You could say this low here. So it's just undercut this low, just undercut that low there. You see this one going across. I'll put a horizontal line maybe on this one. So you got this low here. So you can see the market kind of went down, respected this low, but just undercut it and has come back above. Just closed below it a couple of bars ago. This is, remember, 15-minute chart, 3 bars ago. Just closed and then back above that bar in here. And if we put this horizontal line in here, probably the more significant swing low from maybe here, you know, we held that one there. So you can see that impulsive candlestick there. Just going to zoom in a bit more so you can see a bit better. You can see in here, you've got this impulsive candlestick, you know, bullish candlestick here. The market, you know, higher highs and higher lows. This is coming from yesterday, actually from this morning. Sorry, from this morning. So you've got the higher highs and higher lows in here from today. You know, you've got this impulsive candlestick. The market's defended that one. And even this one here, this little swing low in here, the market kind of held it, cut below, and then was back above. Now what I'd be looking at in here is now looking at the trend line, the downtrend. And you'd argue, like, you know, if you had this one here, or obviously above that already, if you put it off of this peak here, and we extend it out, that we're flirting with it now, you know, flirting with that little counter trend, that downtrend line. Now, probably now, given you've got these failure peaks all at the same kind of area here, I'd probably wait for a break. I wouldn't want to buy this until I get confirmation we're swinging back higher. But you've got highs here at, so let me just have a look in here. Can see a bit better. We've got highs here at 114.06, 114.10, and 114.03. So back above 114.10 would be a bullish signal here. So probably waiting for that. You know, we're trading 113.5, waiting for a break above 114.10 before going for a long exposure. And you can easily see it back up to the high. You know, today's high, which is just above 116.5. 116.57. You can easily see it. So, you know, buy through there, stop initially below the low, and then trailing that stop higher. Okay. So oil still looking fairly bullish in there. Actually, while we're there, let's take a look at gold. So you can see the gold continuous. We're still caught in this big range. That was the day of the invasion. Market spiked higher, spiked back lower, but been slowly climbing since then, and slowly climbing this week. Again, kind of indecisive, but, you know, hesitant, but cautiously higher. And if you go to the 15-minute chart in here, look, there's that little trend line I just drew there. So you got there's the big spike higher on the invasion, and then spike back lower. Since then, we've been in this gradual uptrend, erratic uptrend. This shallower trend line was defended. You've got this more accelerated trend line now, and you can see the market's dipping back towards it. Now, again, if it dips back towards this trend line, that trend line's coming in around 1928, looking for buy opportunities down there on any dip towards 1928. Or if you take out the high, probably going for a break above the high, in here. We're on the 15-minute chart in here, just to break back above the high, which is at 1941.4. Looking for a long exposure back up through there. Oh, it looks like, have I lost the stream in here, guys? Let me try and, apologies if you've lost that. Should have it back now. Not sure how long that's been gone, guys. Apologies there. I just noticed that. The stream failed there. We're having issues with Vimeo, and my apologies, guys. This has happened. It happened. I know it's happened to James. Happened to myself. Sometimes the stream just drops for not for no fault of our own. And we're obviously keeping our eye on the actual screen we're looking at, and we do see that what we're sharing on another screen. So it's a little frustrating for us. So my apologies if you've not been able to see for a while. I don't know how far back you've missed, so I can't really go back. So, but my apologies. But still looking for gold to stay in its bull theme. Let's take a look at a couple of the equity indices. Look at the S&P and the Nasdaq. I'll kick off with the S&P 500. So in here, it's been kind of sideways in here for the last couple of days. So we kind of hesitantly pulled back in here, and then a robust rebound, but hanging on to the strong rebound effort since the invasion. So we had that spike lower, big hammer pattern. It was up then, so that was back on Thursday, up high on Friday, strong day on Thursday, pushing back to another new high on Wednesday, and going back up to that high yesterday, having dipped and rebounded, and a resilient day so far. I'm fully anticipating a break above the peaks in here. And if we kind of step to the 15-minute, do you remember we had it on the 15-minute in here? I might actually take it to the 1 hour chart. You got this inverse head and shoulders. Remember, we broke the trend line. Let me go out to the 1 hour chart. So you've got the more accelerated trend line down here was reversed. You've broken the neckline in here a couple of times, not categorically above the neckline, keeps flirting with the neckline, but looking for a break above the more recent peaks. And we take out these recent peaks in here, which are, I think we just capped off at below 4,300, right? 4,400, excuse me, 4,399 and change. Yeah, back through 4,400. This looks like you can go and attack then. And remember this bigger trend line. This trend line comes all the way down from, just 1 second, let's see the date. This all comes down from the very beginning of the year. Okay, so this is the high, the all-time high from the 4th of January, and then through the peak here from 10th of February. And then, we've got this inverse head and shoulders, real risk to go and challenge that trend line today. So back up above 4,400. That trend line at the moment on the 1 hour chart coming around 4,460. I wouldn't be surprised to see the market, up challenging that. That's about 1.5% up, and maybe even higher. And then you've got these peaks, these failure peaks over here, 44.84 and a half, I think. Yeah, 44.84 and a half. 44.83, yeah, so back up towards 44, mid 44.80s in here. So and challenging that trend line currently coming in around 44, I see around 44.60. So yeah, real upside there, I think, for the S&P 500. Let's take a look at the Nasdaq. Not dissimilar. You can't quite see go to the 1 hour chart and you'll see a similar kind of inverse head and shoulders. We've already reversed this more accelerated trend line, this trend line here that comes down from the 2nd of February, the more accelerated one. You've got that upward sloping neckline here, and we've been flirting with that again in here. Inverse head and shoulders again, looking for the market to challenge the recent peaks. So you've got a little failure peak in here from overnight. That's at 14,290, and then the high, the recovery high so far, 14,327 and a quarter. Could easily zoom out. I'm not sure I got it on this daily chart. Now let me just put it on this 1 hour chart. We can go and take a look at that bigger trend line, going back to the beginning of the year. Why is it not auto-sizing? Should auto-size. Not auto-sizing for some reason. Oh, there we go. Okay, I'm going to get rid of this Fibonacci. It's been on there for forever. Very old analysis. Oh, some more over here. Let me put the trend line, the bigger trend line. Let's see where that comes in. So this is coming not off the actual peak in here. The one off the actual peak, that comes from the end of the year, 28th of December. So we're going to go for this one in here from the 4th of January. Same peak as the S&P was drawn off. And you can see in here going off that same peak, 2nd of February. Oh, look at that. Beautiful. So there we go. Okay, off of the peak there from the 4th of January, off of the peak from the the 10th of February, and you can see, look at the market, it's gone right up to that trend line in here. make this a little bigger in here. So remember, this comes all the way from the high. Look right up to it yesterday. This is, and then backing off, up again, backing off, gone right up to it again. If it breaks this trend line and then above either that overnight high 14,290, or the actual high up there 14,327, above that trend line and a holding, that's a big statement for the Nasdaq, and this could pull the S&P up then to challenge the equivalent. Do you remember we just looked at that one there, not on the daily, on the 1 hour, the equivalent bigger trend line here, which we saw on the S&P around 44, 60, 63 kind of area up there. Okay, so I think that's a really important to watch that in here today, guys. Okay, that Nasdaq, if you're trading the indices, watching that trend line, if we can break and hold above that trend line, and certainly above either the overnight peak, the one we've had more recently, so 14,290, or the peak there 14,327, whichever one you want to go for. I would be inclined to go for through 14,290, initiating a long through there. You may not get that until the cash equity open markets. Sorry, the cash equity open. PMI data, the ISM PMI data might help us up through there as well. Obviously, we've got the backdrop of everything going on in Ukraine. Also keeping an eye on the bond market as well in here. So just a quick nod to the bond market. So we had this spike up to higher yields yesterday, a significant lower yield move, but higher prices, lower yields. Yesterday, a lower price, higher yield move in here, but the market trying to rebound in here. So this was the hawkishness, the red bar yesterday, the hawkishness from Powell, but nevertheless, the market trying to resume the upward pressures. Remember in here, higher bond prices equals lower bond yields, and up in here is probably going to be positive for equities, because lower yields in here are particularly going to help that Nasdaq out. All right, guys. Apologies if you did lose the stream there in the middle of the webinar, but we did get it back online, which is good. I'm going to say bye, end this there. I'm going to wish you all a great trading day. And I'll be back with you with another Bull versus Bear webinar tomorrow on TGI Friday. Take care, guys. Cheers.